Hello, investors. This is Ted Zhang, Portfolio Manager at Revere Asset Management. Today is Thursday, March 27th, 5:34 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. State of the market, we downgraded the state to mild correction from short-term pullback. When looking at the GROTECTION gauge market leaders, we currently have neutral, but deteriorating quickly with the red sub arrow. That can quickly turn into a downtrend as well or protect mode. Short term, we downgraded it to a red arrow after two closes below the 21 exponential moving average. Medium term trend, still the same with the red arrow. All major indexes are below the 50-day moving average. And long term trend, we currently still have it neutral, but with a red sub arrow, as we can barely get back above the 200-day moving average on the S&P 500. While the NASDAQ, the Qs, small caps, mid caps, and Dow continue to live below the 200-day moving average. What happened today? Bears win again after a hard-fought battle. 21 over 21 list down 0.8%. 8 stocks up, 13 down. Big 8 down 0.35%. RG8 down 0.82%. S&P 500 down 0.33%. RSP down 0.26%. QQQ down 0.57%. QQEW down 1.01%. Dow Jones Industrial Average down 0.37%. Mid caps down 0.73%, and small caps down 0.39%. Global 60/40 equities bonds down 0.10%, and GROTECTION up a bit, up 0.16%. Getting right into it, into the charts, as always with S&P 500. Yesterday in the video, I noted the bear flag that was building, and right now we're trading pretty much at the lows end of the range of the bear flag, and really it's a textbook bear flag. So if we continue to crack downward, that would trigger the bear flag setup. You can see we closed red at the lows of the day, and volume came in above yesterday's highs. So that is another distribution day. Not good to see. RSP continued to get rejected at the 200-day. You can see right here, and we're living below now. Volume came in, so another distribution day. Qs, similar thing. Bear flag right now at the lows end of the range of the bear flag. And if we trigger below this line, I expect lower prices. What I notice is the measure move. This is how you calculate a measured move. You take this 540 high to this 466 low. Whatever that difference is, you add it to here. So that seems that's about 60, about like 70-ish points. So then if we subtract that from 490, that would put us around that 415, 420 area. That would be like the measured move here. I would expect some sort of move like that downward, and we would find support around this 423 support or maybe even 413 support if we do resolve to the downside here. QQEW. Yesterday rejects 200, and today we follow through. This is more of a bear wedge that triggered distribution coming into the markets. Actually, I want to back up. I want to show why it was a hard-fought battle. We gapped down today. The bears had control. Bulls took us all the way back to new highs of the day, but bears took us back down. Bulls took us almost into the close, and then bears closed the markets. So continue on then. I believe we're on mid caps. Similar thing. Bear wedge at the lows end of the range. If we could trigger it tomorrow, that will do it. We'll probably have a measured move down something like that. Russell, similar action. Bear flagging right here. We'd probably have a measured move similar to that first leg as well. VIX continues to stay quite low after almost hitting 30. And this is definitely a concern for me because for how fast the VIX pulled back, we barely got a rally. We barely could get above the 200-day moving average. So what does this mean now if the VIX spikes again to 30 while we're forming this bear flag? There could definitely be a lot more pain ahead. The dollar Now wedging back into the 200-day moving average, seen some weakness today, but pretty much flat. Gold continues to be strong. Another new all-time high on volume. And with that, the gold miners, another new 3-year high. And we do have Nugget in TurboTection, and we have GLD and GROTECTION. So those are definitely helping us stay green today. Silver breaking out this cup with handle, super strong move. Go on the weekly chart. We're almost out of this major base, over 31.8, and this is really a 10 plus a year high, and that is massive. So we'll see if we can take that out. There's a potential that silver could definitely make a big move here. Bitcoin, I'll flip over to trading view. Bitcoin is showing RS actually still holding the 200-day moving average, building this little low cheat pivot here below 89,000, this undercut reclaim level. So I have alerts there set. 50 days also there too. And this potential name that you can sneak up into. Bitcoin is not totally acting like a risk off here, like the tech stocks and semiconductors. We will see how this plays out, but this is definitely interesting to note. And finally, with bonds, it was mixed on the yield curve today. Short rates pulled back while long rates pretty much flat. 30-year was up a bit. So not a whole lot of movement in the bond market today. And with that being said, that wraps up the inter-asset correlation for this video. Now I'll pull up the tail of the tape. Back to market correction. Operating still under the bear case. Sustained break below the 21 EMA. AAII actually came in updated today. Bulls rose 6, 27.4. Neutral didn't change, and bears dropped 6 to about 52. NAM also dropped 7 points to 57.55. And when I bring up this graphic here, it's definitely at the lows in the recent range. When we put in a low early 2024 and a low in that summer 2024 when we had that yen carry trade scare and recession scare. So one thing I want to go on a tangent real quick is that so right here, you can take all the data since inception from the NAM Exposure Index, the National Association of Active Investment Managers, and I plugged into Grok, which is XAI's large language model. And what I asked it was, what is the average NAM number during major market bottoms? So it explains the process of how it calculates everything. So in this file, actually, it has all the S&P data with the NAM data. So it's able to go in there, extract the data, calculate everything, and we find that the average NAM during major market bottoms based on the data identified periods is approximately 16.89. And these are for the big bear markets, right? The great financial crisis, the COVID sell-off, 2022 inflation bear. It put in the 2018 bear, but that was pretty much on the fringes of a correction and bear market. So we don't have to count that in there. And the data only starts from 2006. So it doesn't have the dot-com data or the previous bear markets in the past. My next question was, I was curious about the correctional data since that's where we are now. I asked it for the NASDAQ S&P. It can't give the NASDAQ data because it doesn't have the NASDAQ data in the data file I provided. But the conclusion was the average NAM during a 10 to 15% correction in S&P is about 55.42. And coincidentally, that's right about where the NAM exposure index is now. But continue on, the median number is 43. So we could potentially go even lower here in the meantime. And my reasoning for why this market potentially has a lot more room to the downside is two things. The Mag 7, which I will go over in a second, at one point constituted like almost 40% of the S&P 500, and now it's still about 33%. At the highs, it was like 60% of the NASDAQ 100, and currently is around 54%. And many of those names just entered downtrends after hundreds of percents of moves up, and they have no signs of bottoming. And then right now, we don't see bull market characteristics or correctional characteristics, which is leading groups holding up, leading stocks holding up and building bases, and actually breaking out of bases, holding up and following through. We just have a bunch of scattered names, no dominant theme. And one thing I realized over the cycles is that you can't instantly pick out a leading group, and especially some leading stocks in those leading groups and themes. likely not a great market. And that's where my head is right now. That's it with the NAM index. Go back to the tail of the tape real quick. Go through this quickly. Tomorrow we have PCE data, inflation data, and that's the main gauge for the Fed, so that'll be key. Today's keys, S&P versus 221 closed below. NASDAQ versus 221 closed below. Leaders, not the greatest as well. And another distribution day. Day count, down one to down two. Back below the 8 EMA, 2 days below the 21 EMA. And what we did today, we sold SSO Bros, Trend Sox S. That leaves us at 0.42 beta, 1.41% open heat. And bottom line is bears win again after a hard fought battle. So that's it with the tail of the tape. Back to the charts. And we will start off with the mags. Like I said, the mags just entered a stage 4 decline and rejected the 200-day building this bear flag here. So after this massive move up in this last bull market, there's still plenty of room for this index and the Mag 7 stocks to drop. Even coming back to this 38 level is completely reasonable. And if that were to happen, that would mean a lot more pain for the markets. So, I mean, we can try experiment here. I can go to Perplexity right now and type in if the MAGS ETF and what was the price we wanted were to drop to 40, what would the approximate S&P 500 price be if other stocks held constant? Let's do a real-time AI case study here and let's see what we get. Give it a second. Sometimes it takes some time. One has to do a lot of analysis. The reason it's able to do this is because the Mag 7 ETF is comprised of the Mag 7 stocks, obviously, equally weighted. We can calculate the market cap in terms of trillions or hundreds of billions, shaving off if the Mag were to drop to $40, and then compute that with S&P 500 and determine where that would be. So let's see what we get. It says if the Mag 7 ETF were to decline to 40 and everything else stays the same, the S&P would theoretically drop to approximately 4,773 based on the current price relationships. As you can see, this is why I believe there's a potential big downside move if these Mag 7 stocks were to crack and continue to the downside. And that is because the Mag 7 is 33% weighting in the S&P 500. And so this is really important to watch here. And many investors and talking heads even highlighted the concentration risk for the S&P 500 and the NASDAQ because the concentration risk of the S&P 500 and NASDAQ into these names. And once they do deflate, there could be a lot of pain. The problem is so many people's 401ks and pension plans are invested in these two indexes, and people think they're getting diversification, but they're really just buying the majority of these 7 stocks that make up most of the index. And back to 40, I mean, that's not completely unreasonable. You can see that's about another 18% down. That is quite harsh. But let's just talk about this measure move real quick. From all the way here to here, that's about $13. If we're conservative, 49 and 13, that actually brings us even further down to about $13. So anything can happen. You got to stay nimble, and this is just a possibility. So with that, let's go to the 21 over 21 list. Talk about the stocks that were up. SC, based in Singapore, really nice emergence out of this little pivot here on volume. Triple-digit earnings and sales in the last 2 quarters, greater than 30% plus in revenues. This looks great today. Gold, like I said, 3-year high, amazing. China stocks saw inflows as We saw outflows out of the US. YUMC, I highlighted this base yesterday, continues higher. Uber continues to hold in actually in this huge base that extends almost over a year actually. This is over a year long base for Uber. And a lot of fundamentalists talk about the extraordinarily undervalued relative to its intrinsic value for how much earnings it makes. You see triple digits in the last 3 quarters, huge earnings, revenue growth, free cash flow. That's a massive moat as well. So why the value investors like this name. Spotify, another one. People love these algorithmic consumer stocks like Spotify, Netflix, because they just really retain their customers and they just keep on subscribing and they're really just a monopoly in their own fields. Netflix, as we just talked about, holding up well, and many of these names are the ones unimpacted by tariffs, and that's potentially why they are staying up. And with DoorDash, continues to hold well above the 21 and 50. On the downside, Bros reversed, cracked below the 2150. That's why we got rid of it. RBRK, we sold yesterday. Names are lower now. This got destroyed. Okta as well, as cyber name continues lower. That cybersecurity theme quickly blew up already. Palantir is already testing our average, still above the 21 and 50. WGS continues to leak lower after it tried poking its head out. NTNX down 1.8%. This is just all over the place. Super sloppy. It really needs to clear all this overhead before it does anything. And then if we continue up, lost my place. ARK back below the 200 day moving average. Hood stuck by the 50-day, back below the 21. Doximity got stopped by the 50-day as well. And yeah, with that being said, I'm going to end the video here. Hopefully you enjoyed the quick AI case study in this video. And that is quite alarming, actually. I was quite surprised by that. If the mags were to hit $40, the S&P would be sub 5,000. And that's with no other stocks moving. We will see what happens, but there could be more pain ahead if those stocks do resume to the downside. And with that being said, I'm going to wrap up today's video. If you're interested in becoming a client, and we're definitely focused on downside protection here. You can see we do not have the coveted 4 green arrows anymore. And the mandates for both GROTECTION and TURBOTECTION is to grow during uptrends and protect during downtrends. And that is what we are doing. We are also taking some tactical shorts here or there to potentially move the equity curve up while the markets drop. And that's the best case scenario for us. You can email me at ted@revereasset.com or Dan and Don at revereasset.com. Twitter or X is Ted H. Zhang. Our phone is 855 Real Wealth. That is 855-732-5932. Our website is revereasset.com, and our YouTube is also Revere Asset. That being said, I'm going to wrap up today's video. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening, and have a great rest of your week.